Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is a daily analytical report with Alpari. So a video, a webinar where I will tell you what's going on the markets, and we'll try to find decent trading occasions on Forex, indexes, commodities, and other CFDs. So let's start, as always, with the calendar. And on the calendar you can see that in 15 minutes, exactly in 15 minutes, we'll have a publication of the most important data today, which is ADP. So if we do have ADP on Wednesday, it means that we'll have non-farm payrolls on Friday. So this is usually, like traditionally, the most important data, even if we are not expecting any interest rate changes in United States in the next few, let's say the next few months. It is still perceived as the most important data for the markets. It's like that for a long time, and it does not change. So always traders wait for the first Friday of the month. They wait for the non-farm payrolls data to be released, and well, they like the volatility because when you have that data, the volatility significantly increases and creates, for aggressive traders, creates decent trading occasions. So ADP is like an introduction to non-farm payrolls. Non-farm payrolls are released by the government organization, and ADP is released by the private company. Apart from that, we'll have an important data for oil traders, EIA Crude Oil Stock Exchange. We had important data yesterday, which caused a significant slip in the price of oil. As you can see in the evening, we had API, weekly crude oil stock. Previous data was minus 10 million barrels, and as you can see, we had a build this time, plus 2 million, almost to 1.7, 1.8 actually million barrels build. So it caused as you can see, mostly recently we had lower numbers from April. We get lower numbers, but now we had build, and this caused a reversal. Also yesterday, after our daily analytical report, we had ISM manufacturing PMI, which came slightly worse than expected, but it wasn't a big change. ISM prices paid came much better than expected, so that was kind of a mixed data. Overnight we had data from New Zealand, from the job market, and as you can see, well, unemployment rate didn't change, but unemployment change was lower, participation rate was lower, and that is why New Zealand dollar is a bit weaker right now. So what we are having today again is in 11 minutes ADP employment change, so we will watch that live, and the data for the oil traders, EIA crude oil stocks change. From the fundamental point of view, it's all about Apple, which reported positive earnings. And it's helping stocks because mostly Dow Jones and Nasdaq are heading higher. Dow Jones is about to set all-time highs. Thanks to that, it's helpful for the overall sentiment on stocks. So most of the stock exchanges in the world are green right now, thanks to this one company making phones. It's kind of unbelievable, but it's the world we living right now. So we are under the influence of the better earnings from Apple and from the slide on oil that also affects the global sentiment. Apart from that, that will be it from fundamentally. Alan Greenspan had his speech recently. He was a Fed chairman for a long time, for 2 decades. He said that something's wrong with treasuries, with the debt market, with bonds. He does not see a bubble on stock exchanges, on assets, on shares, but he has some issues with bonds. I'm not gonna tell you any details about that because well, we don't have bonds on our trading platform, so there is no reason to talk about that a lot, because well, I want to focus with you on things that matter for you and that you can make profit from, and fortunately you cannot make profit from bonds currently on the platform. So we start with maybe let me go with oil and indexes first. This is oil. Oil last week had only positive days. We also had a very positive Monday, negative Tuesday, obviously, because of the data. As you can see here, this is the reaction on this data. But in overall, well, this bounce came exactly in a good place because it helped to defend 61.8 Fibonacci level. But I don't think it's a major reversal. It is significant because we went below $50 per barrel, which can be perceived as a psychological barrier. But at the same time, we are approaching very important support, which is located here. And let me highlight it maybe with yellow color. Okay, and actually I'm gonna remove this correction equality pattern because it has no meaning right now. Why this support is important? Look here, that's a broken downtrend line, that's the broken upper line of the wedge, that's the broken resistance here. So broken resistance according to price action, and they become supports. So I'm waiting for the price to get there and to be tested as a local support. If this test will be positive for buyers, so we will get a positive formation, bullish formation like a hammer or a investment and shoulder formation, engulfing outside bar, something like that. That will be an interesting buying opportunity here on oil. But with all my heart, I'm against any deeper upswing, a stronger upswing on oil, because I do believe that this OPEC agreement is worth nothing, especially that data is showing that even OPEC countries are not taking part in this agreement, like Libya or Nigeria. And even when we have a drop from OPEC, it's covered by, for example, Russia and by other countries like America. So in the long run, I'm not a fan of higher prices of oil, but again, in the same time, you know that I'm a technical trader and I trade what it is, what the price is telling me. So if the price will bounce here, if the price will use recent resistances as a support, and this time price will tell me that they want to go up. So as a technical trader, I should follow that. 5 minutes to ADP data. DAX is defending this support. but also is stopped on a resistance here. That creates kind of an attempt for a right shoulder of the inverse head and shoulder formation, but obviously now it's too early to that for that. The most important thing right now, I guess, on DAX is the fact that we are below horizontal resistance here. We're below this level. As long as we are below this level, the sentiment is negative. Once we will be able to break this level, that should trigger a positive sentiment on DAX. And you know that DAX has problems with too strong euro, which is affecting German companies because most of them are exporters, and if their currency is too strong, it affects the profits from the export. And also it's about car makers, you know, all those companies. Some of them have the same problem as Volkswagen had, and it affects the price of their stocks. And Germany, if you think about Germany, you think about cars. They have loads of car makers there, which are strong participants of the DAX index. So if they're heading lower, DAX will be heading lower as well. What we're having here is a resistance. You cannot think about buying as long as we are below this area. So price getting there, and that would be an inverse head and shoulder formation. Well, still we have to wait for the situation to develop, but price getting there would mean that we broke three important resistances. So first one there, then the upper line of the wedge formation, and then this horizontal resistance. So once the price will get there, that will be a very positive sign, but for now chances that the price will get there are rather limited. And this is American index, S&P 500. We had the one wedge bullish bearish breakout without any news whatsoever. That was triggered just by the low volatility. Now we have a second wedge, that was red one, that is blue one, but it doesn't mean that the history will repeat itself. Even if it will, we still have a lot of supports. First one, second one. I guess that even the second one is more important than the first one. If we would have a drop now, that would be a head, a left shoulder head, and a right shoulder head and shoulder formation, which potentially could bring us a reversal. But again, for that, it's still too early to tell if it can be a head and shoulder formation or not. And in 1 minute and a half, we will have a ADP report. Before that, I want to show you dollar index, which is defending horizontal support here. At the same time, is very close to the resistance. As long as we stay below this green area, the sentiment is negative. Actually, show all. Or we will switch to the other account now and watch the reaction on ADP, if there will be any. We can do that on euro dollar. Okay, it will be in 10 seconds. We'll see what the ADP is in the United States. Euro is climbing slightly higher. It means that ADP could have been a little worse than expected. Let me check if I will be able to get this number on Twitter. At the same time we can try, oh, here it is on our calendar. Yes, it is a little bit worse, so you can even see that you don't, just from the market reaction, you can see if the number was better or worse. Slightly worse number, and now slowly we move to EIA crude oil stock exchange. So this data, as you can see, the previous one was -7 million barrels. Now we're expecting -3, and we will see what will be the final number. And now this initial movement vanished, and now American dollar is a little bit stronger than it was before the data, but obviously those changes are very low, so we cannot say that they are significant. As we are on euro dollar, let's continue with that. We touched exactly lower area of the gray resistance. Why is it important? Because the lower area of the gray resistance is not this one, but this one. So we touched exactly the bottoms from the June 2010. Maybe on a weekly chart you will be able to see that better. Yes, this gray area is created from this bottom and this bottom. And as you can see, we touched exactly that, and we're having a small retracement. As long as we stay above the red line, the sentiment is positive, definitely. We do have another horizontal supports. I think this one will be important, but let me change the color for the better visibility. This one will be important. This one can be, but does not have to be important. Sentiment is definitely positive. Cable, as you can see, made new local highs, and we are on the highest levels since September 2016. We are telling that for a long time, that we do have a positive sentiment on cable, and the cable should climb higher. So for us it's not a surprise that it's happening, right? New highs, as you can see here. This sentiment should continue as long as we stay above the black line. With this momentum we can reach that resistance, and by that resistance I mean those levels which were highs from July. Yes, from July and the beginning of September 2016. We are on a good way to test those highs. Euro dollar, American dollar to Canadian dollar, they broke this downtrend line, but still look at that drop. The drop is very strong, so we shouldn't be surprised that finally we do have kind of a correction. Sellers might be black. Sellers can be calm as long as we stay below 38.2 Fibonacci level, and actually if this is actually the bottom, that would be nice to see, because that was a support and a resistance. Here 38.2 Fibonacci level looks like a decent potential target for the bullish correction here. Okay, maybe not here, maybe from this. It depends, can be like that. I would love to see a movement here, bearish reversal pattern and a downswing. American dollar to Swiss franc is the next pair, and they are defending this horizontal support that we highlighted recently. that's a positive sign, right? You know the situation because we are describing it yesterday, that inverse head and shoulder formation, and on a weekly chart we do have bullish engulfing, and hopefully this week will be also positive. Australian dollar to American dollar, no clear trading signal, but I guess we have to readjust the closest support. It's a little bit lower. American dollar to Mexican peso broke this horizontal resistance, but is heading to the trend line here. We can have a nice bounce from it. I'm wondering about this pattern. Let me check that if we can use that. Okay, was that used before? Well, almost. This one correct. This one a little bit bigger. This one is definitely smaller. So yes. Those four rectangles are the same in size. Maybe we can think about reversal here with the correction quality pattern and a trend line here and a 61.8 Fibonacci level. So that's potentially a nice place for a bearish reversal. I'm gonna mark that with red color and patiently wait for the situation to develop. Silver made an attempt to break that horizontal resistance. It wasn't the best one in the world, and now they will have to pay the price for that, probably with a correction. But this correction can be stopped actually with the gold, because gold is still in a positive place. It's above the horizontal support here, it's above the trend line. It looks like this upswing on gold can be sustainable as long as we stay above the gray area, even not the trend line because it's steep. As long as we stay above the gray area, the sentiment on gold is positive. So then the positive sentiment on gold can actually influence, can positively influence the sentiment on silver. And now three interesting trading occasions which I mentioned on the Trading Sniper. So British pound to Japanese yen, and actually those three did what was expected, what I told you yesterday, right? Well, most of the instruments are doing that what is expected by us. That's why we are here in this place and we are telling you about our thoughts and views on the market, because it usually works. But those I personally like the best because they are very, very technical. They are very smooth setups. So in British pound to Japanese yen, we had an upswing, we had a flag, which is a trend continuation pattern. We had an inverse head and shoulder formation here, left shoulder, head and right shoulder, then an upswing, and then a flag again, flag also, inverse head and shoulder formation, left shoulder, head and right shoulder, but right shoulder is also made of inverse head and shoulder formation, left shoulder, head and right shoulder. And we broke the neckline, we broke the upper line of the flag, and that creates a buy signal. And the buy signal with a potential target of 147.7 here. So to this point we still have 120 pips, right? It looks positive. Breakout of the upper line of the flag formation here sets the positive tone here. That's a good one. This is another good one, and this is euro to Japanese yen, which is having a perfect trend here. I think we can make it a little bit closer, especially this one, upswing, flag is a trend continuation pattern, so we broke the upper line of the flag and trend is continued. And then we got a ascending triangle, which is also a trend continuation pattern. In greater detail, it looks like that, a beautiful ascending triangle showing that we have an increased pressure on this resistance, and finally it got broken. And what price is trying to do, well, tried at least few minutes ago, was trying to use this this previous resistance as a closest support, which price usually normally do. That's absolutely normal. Apart from that being normal thing, that's also a great occasion for the traders to jump into this movement, because here, if you're late, you think about buying here, that was a bit too high. But if the price would retrace and create a bullish engulfing pattern here, a bullish reversal pattern here, somewhere here, that would be a great occasion to buy with lower prices, but with additional proof of the positive sentiment. So I like ascending triangles very much. They do not happen very often on the chart, but when they happen, they bring nice profits to the traders. And actually, I was waiting. I didn't want to open here. I was waiting for the price to go lower that I could buy here, but I think it's not gonna happen with this small reversal here, but I will be patient. But definitely I will not chase the price, because it's never good to chase the price. You shouldn't do that. And euro to Australian dollar with a very nice technical formation. We wrote about that on our, I think, Polish investing channel. I wrote an analysis about euro to Australian dollar where I anticipated that the price will go up. I also mentioned that yesterday, definitely. I mentioned that yesterday on a daily analytical report. So why my view was bullish? Because that's what the trend is, but you can say, okay, but the price making lower highs and lower lows. Price was making lower lows and lower highs, but then we broke the downtrend line, and now the price making higher highs and higher lows. In the long term, in the midterm, we had a correction, which was a flag. Flag is a typical trend continuation pattern, and you know about that because it's not the first flag today. Those two lines are parallel. That looks beautiful. And also the end of the flag is an inverse head and shoulder formation, left shoulder head and right shoulder. And neckline is a horizontal resistance here, and it was broken. There was another horizontal resistance here, as you can see, quite precise. It was respected in this case again, and now we're above those two important resistances, and we're heading for the upper line of the flag formation. In my opinion, just breaking this sets already the sentiment for the next few days, and even if we will stop here, I think that we should test those highs from the beginning of June soon. Normally you should wait for the breakout of the upper line of the flag formation, but in my opinion the choices were made already there, and that will be just a follow-up after this. I think the choices were also made when we are breaking this one. Support, it's even longer. Okay, it shows the significance from here, from the beginning of April 2015. Resistance, support. Here a bit of confusion, but again support, resistance, support. This level got broken, and that should set the sentiment for the next few months. I would say months. That's the place where the bottom of the head was. Right, so even if they will bounce from this resistance, as long as they stay above the green area, the sentiment is positive, and I am expecting that the price will break the upper line of the flag here. Okay, my friends, that was daily analytical report with Valpari, with few very decent setups, smooth setups for the price action traders, for the swing traders. I hope you like that. And now we'll have a short break, and after that a webinar about MetaTrader 4, about using this platform for trading. I hope to see you all there on this webinar, because that will end this more technical stuff, theoretical stuff, and we'll be able to start with practical stuff, with learning how to trade, strategies, systems, candles, patterns, fundamental analysis, price action, and all that is still to come. But first you need to know how to use the platform to trade efficiently and not to worry about the platform usage, that you will be able to focus on other things, more important things. If you liked our view on the market, you have to follow us on Twitter and visit our website alpari.news. Thanks very much and goodbye.